Alright, hello, and welcome to Camel Finance. I'm your boy Camel, and if you haven't seen one of my recent videos called The Global Blackout and the Freezing of the Financial System, here it is. Go and watch that, and here it is again, just so you can see. Why am I saying this? Because Cloudflare systems are down currently. Okay, they've identified the issue and a fix is being implemented. They're investigating it, but we'll continue to update when you have more information. Okay, so FTX posted this: Cloudflare is experiencing an outage, and so FTX and many other sites are going to be hard to access for many users. FTX markets are in post-only mode. Okay, let's keep going. So you might be thinking, well, what's Cloudflare? Cloudflare is an American content delivery network and DDoS mitigation company. Founded in 2010, it primarily acts as a reserve proxy between a website's visitor and Cloudflare's customers hosting provider. And so what do they use this for? While Cloudflare secures and ensures the reliability of your external-facing resources, such as websites, APIs, and applications. Okay, so what does that mean, said in the simplest form possible? Dean Herbert has summed this up beautifully. He says he feels like a broken record at this point, but Cloudflare being a single point of failure is absolutely not a good thing. But hosting a site without Cloudflare is basically suicide, and that is because they offer this DDoS mitigation, okay, distributed denial of service attack. So can't win with it, can't win without it. And he says, in other words, this internet thing is doomed. So this might be hyperbole. I mean, we've been operating for a while with it, but I just thought the timing of this going down so soon after I was sort of warning of these global blackouts and freezing of systems, and now, you know, cryptocurrency exchanges such as FTX are experiencing problems. We've seen a lot of this stuff lately, so I just thought now's a good time to remind you, not your keys, not your coins. And this is true of gold and cash as well. You know, if you own crypto on an exchange, it's not really yours until it's on a cold wallet. If you own gold in some form of account and it's not in your hand, then you don't really own it. And the same is true of cash. And whilst we're on the subject of cash, check this out. There is a bank run going on in China. Long lines in Henan, Shanghai, and Dandong. So limits on how much they can withdraw have been placed. So you can see here that this is a bank run that's going on right now in China. People are queuing outside the bank, only to be told that you can't have all your money. We'll tell you can have up to X amount. And so keep in mind that whilst it's easy to say that could never happen here, right, oh, it's not going to happen here. The UK's largest lenders are no longer too big to fail, says the Bank of England. Okay, we're being told this on the 10th of June. So things, when they get ugly quick. This sort of thing is fine until it isn't. During the 2008 financial crisis, bank runs occurred all over the place. And in America, depositors withdrew 9% in 9 days of the total deposits. Like I said, not your keys, not your coins. If you've been watching my previous videos, you'll know that I also recently talked about this little miners trick, where the Bitcoin miners can basically dump the price down in order to squeeze out the smaller competition and hand over more hash rate to themselves and then buy the Bitcoin back for cheap. And it looks like we've got evidence of that. You can see that miners have done an awful lot of selling into the open market over the past month or two, and now they have flipped to accumulating, net accumulating. So they are not only finished dumping Bitcoin into the market, but they have also decided to buy the dip. And miners know best, right? Likely what they're doing is they have spotted this issue. First of all, they probably caused it, as I said, with their little mining trick. And secondly, Bitcoin is at record levels of oversold. This is Bitcoin relative to its 200-week moving average, being the red line, the 200-week moving average. We're below that, and we historically do not spend much time below it. The blue line is Bitcoin divided by its 200-week moving average, and you can see that we are at record levels of value relative to the 200-week moving average. At the same time, the UK government has dropped plans for data collection rules on self-custody of Bitcoin wallets. So this would be your cold storage and stuff like that. This is good, but they're not going to waste time and resources trying to collect data on stuff that ultimately is worthless them having. I saw this tweet and I thought, this is brilliant. I can keep buying Bitcoin longer than the Fed can continue quantitative tightening and interest rate hikes. Who's with me? I'm absolutely with him. We can continue to buy Bitcoin every month, every week, however much you got. And the Fed's bullard is telling us that maybe we don't have to go as far on quantitative tightening as it might seem. You know, they are prepping for this pivot. I've been calling for this pivot for weeks now, and we know we're getting closer and closer every day. We're going to see this pivot, and as soon as the Fed pivots, you know, stocks, property, everything else, including Bitcoin, especially Bitcoin, it's all going to snap to new all-time highs very, very quickly. Whilst we're on the subject of Bitcoin, I've had a couple of people write to me or message me and ask questions about the best way to accumulate, the best way to invest, that sort of thing. Whilst I don't give financial advice, what I can do is point at data and just say, look, maybe you didn't understand the power of dollar cost averaging. If you just buy $10 of Bitcoin every week and do this for 5 years, right? You'd have to do anything. You just, every week you buy $10 or 10 quid's worth of Bitcoin, and then do that every week for 5 years. Okay, currently it would have cost you 2,610, and you'd be sat on just over 12 grand worth of Bitcoin. This is a 367% return over the 5 years. Now, what if you say, well, all right, that's fair enough, but what if I only got into Bitcoin 2 years ago? Well, you can see that you would have invested 1,050, and even after this enormous decline that we've had of late, you would have still been 60% up, which is well above the rate of inflation. Okay, and as we get this bounce out of the oversold conditions, where are they? As we get this bounce out of the oversold conditions, all of the Bitcoin that you have accumulated up to this point will, of course, be appreciating in value the entire time. So this number and this number will become significantly larger than they are now. So don't think, if you're the sort of person that thinks, oh, I can't afford a whole Bitcoin, maybe it's not worth it. If you're the sort of person that thinks, I can only afford a small amount, you know, don't underestimate even a tenner a week. Like, most people probably waste that on takeaway or drinks on the weekend or something else. So even if you do £10 a month, again, not financial advice, I'm not telling you what to do, I'm just illustrating the power of the set and forget dollar cost average, and just buy it at the same time every week, every 2 weeks, every month, whatever it is, and over time you will outpace inflation. So I mean, this is if you started 2 years ago, but what happens if you started 3 years ago? You know, the longer you hold this, the bigger these numbers get. Okay, or if you started 4 years ago, you see what I mean? And this is just from £10 a week. I think most people would probably be quite surprised by the amount of wealth you can generate with a tenner a week. Where else can you get this return? Nowhere that I know of. A lot of people are calling for this current crisis to be just like 2008. But if you look at this is the total household credit to GDP ratio. We're nowhere close yet. We really are nowhere close. People are feeling the effects of inflation. People are noticing the price increases, especially at places like the petrol station and food in the supermarket. People are noticing that things are getting more expensive. People's bills are going up. People's rent are going up. But I don't know many people that are truly financially ruined at the moment. There are many people that are struggling. And I do understand that and empathize with that. But we are not at the point where people are having to live off of dry pasta yet, in my opinion. And that is where we have to be before we can get one of these true cool downs. So I do think we're going to see this pivot soon. I do think the inflation is going to come, and I do think that we're going to get new all-time highs for Bitcoin, the stock market, and even property potentially. So with all that said, let's jump into a few charts. The dollar has put in a higher high and is now selling off. We know that the statistics tell us, because this is the first, second, third, fourth, fifth base, that while 6 and 7 can occur, when we're getting near the top of this parabola, and anything above 4 or 5 starts to be statistically weak, then it's reasonable to expect a breakdown soon. How soon, we don't know, but I've got here the 60-day cycle low mark for Bitcoin on the 7th of July. So we know that possibly that and the Fed hinting that maybe we could pivot sooner than expected. Okay, so things are lining up. We're still sort of following this. We'll continue to do so. The stock market is also due for a cycle low there and thereabouts in the coming weeks. So could we perhaps get a forward-looking statement from the Fed to say that we're thinking about easing off or pausing rate hikes in September? And is that going to be the catalyst for a big bounce here? Markets are, of course, forward pricing. So any news that we get now will be priced in before the news actually occurs. So I think things are shaping up to to see new highs into the end of the year. I know that's probably not a popular opinion at the moment, but just going to try and take it slow. It's a horrible environment to be a trader in this sort of thing. You're going to get chopped up and stopped out a lot. If you've been following the channel, you would have seen we got some rather nasty stop outs and entries and stuff. But you know, you can't let it get you down. This is a horrible environment to be in. And when we go back to this environment where we're trending up on quantitative easing and stuff, you'll see how easy it is to just to take advantage of every single one of these setups as they occur. So make sure you're subscribed if you want to see that. Oil, I haven't covered oil in a while, but oil is telling us something here. We got this big technical breakdown. Perhaps a line chart would be better. Yeah, if we redraw this using the closers only, we've had this sort of big technical breakdown. And so areas of interest here are around here. This is going to be a big one, and if we can lose that, then the next logical one really is this sort of 100 level, I think, down here. And so we'll go back to candlesticks and see how that looks. Yeah, so you could see, you know, we're right around there at the moment, and if we can get down through this and then maybe into the 100 region, all around the same time as these lows are due for the stock market and Bitcoin, then this is going to give the Fed much more, or should we say, respectability or credibility for a pivot, because they won't look like they've done such a U-turn. Keep in mind, this is inflation right here. This is oil denominated in US dollars. So as the dollar gets weakened, as the dollar gets debased, as the dollar gets devalued, it takes more dollars to buy the same oil. And that's what we're seeing here. But with this technical breakdown, especially if we can lose this level and drop down to a more reasonable 99 to 100, then the Fed will have much more credibility in saying, look, inflation is cooling off, and we can see that in commodity prices, and therefore they don't feel so bad about setting up one of these pivots or moving to a more accommodative stance for markets. We'll take a quick look at gold. Gold's still inside of its wedge. I still think that maybe we've got to have a last shakeout, maybe we've got to do that, or maybe we haven't, maybe we can break out, but I think this breakout's going to come soon. I really do, especially on a Fed pivot, when they're telling us they're going to drop interest rates or pause interest rate hikes, then non-yielding gold becomes more attractive relative to the bonds. And also it tells us that we're going to have high inflation, and traditionally gold has been a good inflation hedge. So I have high hopes and high expectations for this at the moment, although, you know, I'm willing to be proven wrong. If we drop down in here and spend some time in here, then that is going to open up much lower levels, and it'll be time to lighten up then and reevaluate. But for now, we are indeed inside this wedge, looking to break out. So we'll see how it goes. I've still got a silver position open. It's basically done nothing, hasn't it? So, but that's why it's important. We've got to push this trade. You know, maybe we get stopped out and we have to re-enter on another new trend line, or hopefully we can get a push. We'll see. Obviously, it kind of depends on where gold is going to go. And then we'll take a quick look at Bitcoin. No longer sideways. We have certainly broken down. And are we going to put in a V bottom recovery here? Is this going to end up looking like the C19 plunge, where we do something like this? Let's get a bars pattern. Try something like that. You know, is this what we're going to get coming out of here? I'll move this other one out of the way so you can see. Are we going to get this sort of plunge and then just a V recovery and go? It's entirely possible. We'll see how it goes. But for now, I think this is pretty much out of the question, isn't it? This has been violated, but we do have this 60-day cycle low. Now, it's possible that we're not going to form it here. It's possible that we're going to form it earlier because of this forcing down, or maybe we've got to do a double bottom. But one thing that's really interesting, I've got this from Blockchain Backer. I think I have actually shown this on another video, but you can see that a long time ago, back when the price was in the 2000s, Bitcoin did this big capitulative move where we had two rounded tops followed by a retest of these lows, a bit of sideways chop, and then a breakdown. Okay, and that is exactly what we've got right now. So we've got this two sort of rounded tops followed by a sideways chop inside of this box before breaking down, and then we go 1, 2, 3, 4, 5 before a final flush. 1, 2, 3, 4, 5 before a final flush, and then look what we did. We V'd straight back up. And that appears to be what we're doing now. So we've got a clear line of invalidation. what this structure shows us is that we didn't come down and make any more lows. This was literally a V recovery. So if that's going to be the case, then we really don't want to see these lows taken out. So all the while we're above these lows, I think it's pretty safe to say that the V bottom recovery is in play, and that possibly we could just expect a sort of choppy walk right back up to the 28, 30k level. And that would be much more reasonable, I think, for Bitcoin. Like, we are well oversold here. This is way too cheap, really. A lot of the miners are getting pressured at the moment. So this is not the right place for the Bitcoin price to be. And markets can remain illogical longer than most people can remain solvent. But I think things are looking up. Bitcoin's certainly trying to put in a bottom. Ethereum's got a very similar structure as well. You can see that here. We've sort of broken down, made this capitulative move, and now we appear to be recovering. So the one thing that almost nobody expects, including you're probably watching this and thinking, nah, we got to go lower, like it all seems broken, we got to go 14k Bitcoin, all of that stuff. And maybe you're right. I don't know, as ever. I never know. I'm not trying to predict. But I think the one thing that almost no one is expecting is just this to wick straight back up and end up here next week or the week after. And certainly with any kind of Fed pivot, that's going to open up the possibility for that to happen even quicker. So I hope you enjoyed today's episode. I hope you found value. If you did, I'd appreciate it if you could drop a like and subscribe. Follow me on Twitter if you're not already. And in the meantime, make sure you look after yourself. Take care. All the best.